What's up, YouTube? I'm William Bitter. This is my channel, Money Thoughts.
Money Thoughts.
So in today's video, we're going to talk about how I've lost nearly $500,000 just since the beginning of this year. So January 1st of this year, I had a net worth of $935,000. And currently my net worth is sitting around $478,000. So that means that basically in the last 10 months, I've lost $457,000. That's a percent change of 49%, nearly half my wealth gone in 10 months, which is pretty crazy. Some thoughts and feelings that pop up around this are like, I'm just grateful that I was in a position that I could lose $457,000 worth of net worth and have it essentially not affect my day-to-day lifestyle in the least. I have a lot of gratitude around that. But nonetheless, it doesn't feel good to watch your entire life savings get cut in half. So let's look at the breakdown really quick. I've kind of simplified things and rounded to the nearest $1,000 just to make things look pretty. In the beginning of this year, I had my Tesla, which I ended up selling for $60,000. So that contributed $60,000 of my net worth at the time. So my house that I run an Airbnb out of was worth $485,000 at the time, which was up $100,000 from when I bought it about a year and a half prior to that. Currently, that house is now worth $460,000. At one point, I think my home, according to Zillow, was worth like $530,000 or something. So it's come down a significant amount since then, since the Fed has started raising interest rates and mortgages have skyrocketed, demand for real estate has gone down. But since the beginning of the year, not too much of a drop for the value of my home. The main difference in my net worth has to be my stock portfolio. My stock portfolio in the beginning of this year was worth $865,000. Now it's all the way down to $460,000. The majority of my stock portfolio is in Tesla stock, over 80%. Yeah, at the beginning of the year, I had around $8,000 cash. Currently, I put it at zero. I mean, of course, I don't have $0 in my bank account, but essentially, I'm living like, I guess, paycheck to paycheck. As I get a little bit of passive income, I spend all of it. So I'm pretty much sitting at, whatever money is in my account for the month, that's what I'm going to spend for the month. Those were my assets. And then liabilities, I had my mortgage on my house, which I owed at the beginning of the year around $295,000. Currently, I owe about $290,000, so I've paid it down $5,000. Another pretty important aspect of my net worth is in margin. So I did have $188,000 of margin. So actually, a few months ago, when the market was crashing, I decided to sell my Tesla, and I think I used $40,000. I sold it for $60,000. I think I used $40,000 of that sale to pay off some of my margin, and $20,000 I used to buy the dip and purchase more Tesla stock, which in hindsight, maybe I should have just paid off a little more margin instead of trying to buy the dip. So currently my margin is sitting at $152,000. So that's pretty much the breakdown of where I was and where I'm at currently. So some of my thoughts around what's going on in the stock market. Everything that's happening in the markets right now is very macro based. The Fed has been raising interest rates like crazy. It's forcing the US economy into a recession. The majority of my money is in Tesla stock, which I just think is in such a good place to weather the storm. Just a quick note, please don't take anything I say as investment advice. I'm not an advisor, and I'm just someone on YouTube, and I'm just sharing like my thoughts, my opinions, my experiences. So none of this is investment advice. Do your own research, do your own homework, make your own decisions. But I personally believe that Tesla's in a really good position to weather the storm. The things that I look at are, Tesla stock is down 50% since its all-time highs earlier on in the year, and they've increased their production by 50%, and their earnings per share that they're going to report in a few days is probably going to be in excess of 100% growth since the beginning of the year as well. In my opinion, Tesla is basically at a 75% discount. While seeing my net worth cut in half, the value of all of the assets that I own have gone up in the way that I value them. I still believe that there's a lot of deflationary pressures. I listen to Cathie Wood. Everything that I hear her say just makes sense logically. And so I do believe that there are deflationary pressures that are working their way through the system. When they're going to become visible in the CPI reports that actually affect what the Fed does, that I'm not sure. But I do think that when we start seeing deflation in the CPI numbers, the Fed will quickly start reducing their plans, at least, of raising interest rates, if not keeping them the same or possibly lowering them. Time will tell, and we'll see. Eventually, I think the Fed will see inflation come down, and they'll make a U-turn and at least slow down their rate hikes, stop them, and maybe even reverse them. I could see market sentiment pulling a real quick 180 since the market is forward-looking. So this is why I feel pretty good owning the assets that I do, even though in the short term I've seen such a huge dip. I do have some thoughts on I took out a significant chunk of margin and I justified this margin because I essentially used this margin to invest in my Airbnb and to invest in my Tesla, which I considered assets that are less volatile. And I figured if there's ever a market downturn, I can sell these assets and pay off my margin and avoid margin calls. However, when it came time to it and I sold my Tesla, I do kind of have some regret in that instead of just taking the full amount from selling my Tesla and paying back the margin, I took 20 out of the $60,000 of that sale of my car and I bought the dip. I believe Tesla was still trading at around $835 per share. This is pre-split, so roughly, I don't know, $280 per share. So obviously that wasn't the bottom yet. And that was probably an error on my part. And so in hindsight, I'm probably learning a lesson that many people have learned. And that's that, margin can be pretty dangerous in the short run with market fluctuations. And I don't know about you guys, but I had no idea that the Fed was going to raise interest rates so much, so quickly. From all the years that I can remember, interest rates have always been trending down, and I knew there was going to be inflation, but I thought that it was going to be transitory. I thought it was going to quickly come back down. And I didn't realize how much the Fed was going to raise interest rates and how this was going to affect the market. And then we've also got the war in Ukraine, which of course, a nuclear war can't be good for the stock market. But I'm an optimist, so yeah. In hindsight, margin pretty dangerous. I made my bed and now I've got to sleep in it. I have no regrets on any of my investments. I do have some minor regrets on how much margin I took on. I do feel that margin introduces unnecessary risk, but I've made my bed in terms of the margin bed, and I will sleep in the margin bed. In order to sleep in this margin bed, I do kind of have a plan. And right now I'm kind of skipping above a margin call at around, I've got about 20% drop above a margin call, which is the closest I've ever been to a margin call, which sucks. So probably the first thing I'll do if I get close to a margin call is I have one Bitcoin in Robinhood, so I'd probably sell that and move it over to my Interactive Brokers account and pay off some of my margin. Other than that, I actually applied for a 0% interest credit card for up to 21 months. So I figured that maybe I start putting some of my expenses on that. My absolute worst nightmare is selling Tesla at all-time lows. And so perhaps I will go back to work, make some money, pay off some of this margin. And then if things get really bad, I guess I could always just sell my Airbnb and pay off all my margin. Try not to make the same mistake that I made before where when I sold my car, I tried to buy the dip. However, I do feel like if I sold my Airbnb, I would have to at least buy a little bit of the dip and then use the majority of that influx of cash to pay off my margin. So these are kind of like my intermediary like plans of like worst case scenario when I start, if things get really bad, I at least have a plan to avoid selling Tesla stock, which I think is extremely undervalued right now. Luckily, I do have some passive income that's offsetting my my expenses, so that's basically taken care of for me. And hopefully, we see a bottom pretty soon here, and I don't have to worry about a margin call. So learn from my mistakes, and my heart goes out to all of you guys being margin called. If anyone is within arm's reach of a margin call, please leave a comment below. And much love to all of you guys, and have a good weekend. Peace.
Save and invest your money.